Welcome to Over the Curb, the podcast dedicated to empowering truck dealerships and remarketing professionals. Hosted by Ethan Nadolson, a seasoned expert in inventory management, marketing, and used truck sales, and the CEO of SOAR. Tune in as we talk shop with industry leaders, dive into the challenges and opportunities of remarketing, and explore how to maximize your inventory's potential and get your trucks off the lot and over the curb.
Hey everybody, welcome back to another edition of Over the Curb. I'm your host, Ethan Nadolson, and I'm joined here today by John Pfister, and he's with Mazo Capital. And I think you guys are going to be pretty excited about this episode because we're going to dive into some finance questions that I know everybody has. So John, thanks for being on the program, and I really appreciate you being here today.
Yeah, Ethan, thanks for having me. I'm looking forward to the conversation, and certainly know that finance is a bit of a hot topic right now.
Yeah, 100%. It's come up on a few of our other podcasts and in daily conversation, I think, at dealerships and just all around. So we've been through a pretty tough time, John, with COVID and, 2019 and then going into COVID, some crazy times with truck pricing. I think everybody's pretty familiar with that, but can you give us a little bit of an idea of where finance is today and how we got here?
Yeah, I think we have to. I think where we are today with finance is a direct result of where we were with finance during COVID and in the ensuing years, right? So the couple of years after COVID, what you saw was a race to originations within the equipment finance space. Originations, transportation was certainly a hot industry. There was a tremendous amount of money dumped into the economy, so everyone had money for down payments. Everybody wanted to quit their job and go start up a trucking company and be an owner operator. And so you had this really frothy market, and you had a lot of excitement about building your own company. And so what we saw was this massive surge in demand. You also had, and I will add, in COVID and the ensuing years, because of the extra money that had been poured in the economy, you had pretty frothy kind of consumer sentiment. And so many people were, you know what happened with Amazon. And I know at my household, there was an Amazon package every day at the doorstep, but you had this massive amount of goods and goods that were moving through the economy. So because of that, there was an extremely kind of exuberant transportation market as a result of all the goods that were moving through the economy. And so prices on these assets went sky high, right? Prices on these assets went sky high. There were a lot of people that hadn't necessarily weathered a downturn or didn't necessarily have experience in running a business that were financing these trucks, starting their own companies. And so as the market started turning, right, and as delinquency started rising, as freight rates were dropping and fuel prices were increasing, you had a lot of people that started turning trucks in, right? Mm-hmm. Leaving them on the highway. They were being repossessed. They were defaulting on their loans. And so you started seeing a significant uptick in delinquency and in repossessions occurring on trucks that were 130% of the value of what they were at the current time, right? So now fast forward, after the glut of repossessions, the glut of delinquencies, now you have a general softening, or you had a general softening of spot rates, of freight rates. And so people who had purchased these trucks were not able to afford the monthly payments on them, right? Now we're in a situation where people have been harmed so much by previous delinquencies that they're wanting to stay out of the industry altogether. We saw numerous equipment finance companies that ostensibly closed their doors. We saw several others, right? And really kind of an overall trend within the industry in which companies that previously were financing small fleets, right? Let's say 2, 3, 4, 5 fleets, started setting fleet requirements at 10 trucks. So they really were only looking for the mid-sized carriers and the larger fleets, and really looking for the strong credit customers. PayNet, a company owned by Equifax, which I'm sure many of the dealerships and their finance arms are quite familiar with. PayNet also, because of the rise in delinquencies, was risk rating anybody with a SIC code in transportation as significantly more risky. So PayNet scores were dropping. Interest rates offered to those customers were increasing. We're in quite a predicament.
And we're not out. We're not out.
Not yet.
That's still going on. There's still repos going on. I think it's slowed is my take on it, and what I've kind of experienced in discussions. That's slowed, but we still have some of that we're still at I'd say the tail end of working through. Would that be fair, John?
Yeah, I do believe, and when we look at overall delinquencies, it's slowed down, right? As you mentioned, and do believe that I believe we've hit the bottom. I believe we've hit the bottom, and there's only up to go from here. And I know you and I have spoke a number of times about some of the sentiment about the next 6-12 months, but I do believe that we're at the bottom now. Things have normalized a little bit more, and we're starting to see a healthier market. We are still faced with credit markets in general that don't want to touch transportation, right? Especially anything over the road because of those previous delinquencies.
Yeah, but to say all that, there's still opportunity. There's still financing going on all the time. However, I think some dealers need to be a little bit more strategic on how they're handling some things. They need to be more efficient. So, SOAR, we're all about, input your inventory one time. You get lots of results from doing something well one time. So when I'm looking at credit and I'm looking at technology and some dealerships catching up, there's still dealers out there that are doing stuff on paper. Mm-hmm. There's still dealerships out there. And you and I have talked about this exact thing, right, John? About taking a customer call and you are emailing them off a PDF in a lot of cases of a credit application. Once they get the credit application, then the salesman is having them fill it out. One thing I always like to talk about is what if it's an owner-operator in the bunk of their truck? How well does that work?
Right.
And what's that process look like? So these are things that we're challenging dealers to look at every day. How are they communicating out? Are they taking advantage of texting? Are they taking advantage of some of the online capabilities, the cloud, and standardizing that process? Can you maybe speak a little bit to that and things you and I have discussed many, many times, but maybe for some of the people out there that are still shooting off different PDFs or have a different process than what we might have, maybe a little bit about what you or / now we're doing together, some of those kind of things.
Yeah, these are all things that we contemplated at the start of Mazo, and as we've continued to develop our technology. And I know you and I have discussed this quite a bit, right? That the digitization and kind of the commoditization of a lot of tools that really make the finance process much simpler and much easier to reach a customer where the customer is, right? So it's all good and well if you send them a PDF and they're sitting in their office and they can print it off and then fill it out and scan it back to you. But when they're in the bunk of their truck, right, or when they're out in the field or they're at a rest stop, you want to create the ability for them to complete the credit application via their email, via their cell phone. You want to create a digital intake mechanism for that customer. Additionally, things that we've contemplated, and then I know that a lot of folks are moving towards, and I certainly would encourage any dealer to check out, but we're doing most of our power of attorneys, right, and using eNotary for our power of attorneys. So the customers are not needing to go into a bank or into a FedEx to go get those power of attorneys notarized. They're able to do it right from their cell phone. DocuSign, additional tools. We're trying to really make the process as simple as possible and give the buyer less reason to hold off on getting, kind of keeping the cadence of the transaction moving along. So we're trying to make it as easy as possible. And I would encourage anyone to look into these tools or to reach out to you and the three of us can discuss any tools that are going to make that overall finance process much more enjoyable and smooth, if you will.
Yeah. And I don't think it's just the enjoyable factor, which is 100% a thing, but it's the efficiency of it. Today's market, just everything, right? And you mentioned the Amazon phenomenon during COVID and getting the Amazon packages every day, which I think I'm still getting. I don't know if my family's ever stopped that one, but they've added Walmart or something else to it too. And
right.
God knows what else. These packages come in. I'm just like, okay. But so that's definitely going on, and that just speaks to immediate gratification and also just being able to do things on a cell phone, really, or a computer, but on a cell phone digitally. And so as we start to look at this digital age and this whole new generation of people that are expecting to be able to do it that way, they're shopping for trucks on their phone. Mm-hmm. And as they're shopping for trucks on the phone, well, guess what? If you're the guy that's like, well, let me send you a PDF, and they're getting the PDF, and it's troublesome for them, it's difficult for them, to your point, you're potentially not going to get the business.
Yeah.
Number one.
Necessary roadblocks, right?
Yeah. Yeah, 100%. So you've got that, number one. Number two is just the efficiency of the fact that I can send out a credit application, or it's probably already, like in our case, it would be embedded on the dealer's website. If you send a spec sheet out, it's on the specification sheet that you just texted to them. They can click Get Finance, fill out the credit application. We've got that technology in place today. However, a lot of dealerships do not. And so can you imagine a dealership that's sending a PDF off, and then they're surprised when that customer had already moved on because, they've got that, technology ADD. They're sitting there swiping on their phone. Oh, hey, I found a different truck. And another dealer's more responsive, and you just lost a sale or multiple sales. And that's stuff that's not even tracked probably very well within a dealership. So the impact of that, I don't know if we know, but it has to be there.
Yeah.
And
I would say that it's likely that you provided a credit application. They've come into your dealership. They said that I really like this truck. I want to move forward with it. You sent them the credit application, and on their way to go to their office to go print that credit application off, they stopped at one of your competitors. They had a digital finance process or some easy way to intake that application at the dealership, and they were able to close that sale right there on the spot, right? Or at least get that customer kind of sunk into working with them versus
that. You know what? That's a great point, and something I've talked about since the literal 90s about getting a credit application as part of the sales process. So as soon as you get that credit application, now they've made some kind of a mental commitment that they're going down a path with you. If you don't have that credit application or you haven't established that, then you're at risk. Yeah. Not that they can't otherwise, however, just mentally, once they fill out that credit app, like, oh, we've got the wheels in motion. I'm doing something here. And this is the dealership I'm working with. I think they have a lot higher likelihood to stay with you through that process because they've engaged with you. They also show their commitment level, right?
Absolutely.
That's another huge thing. I mean, how much time do you want to waste? I know I had I don't know if you know Junior from eBay Motors, but we had these conversations about just trying to, how much time is your sales team working with a customer that's not qualified to purchase? And I'm not just talking financially even, I'm just talking like they're not even qualified at all. They're probably not even going to, they're sitting at a truck stop. They're not even looking for a truck. They're just bored, right? And they found you somehow. So getting the qualify the customer in the sales respect, but also in the financial respect, makes a lot of sense up front. Not only for that reason, but also, the guy's looking at the big, shiny, almost brand new used truck, and but he's got credit for a 10-year-old truck. So that can help manage that part of the process as well. So I think those are all some great little takeaways from this. But as we start to think about this digitization process and speed to market, speed of the sale, and all these things, I think that's critical.
Mm-hmm.
But on the consumer end, I mean, these are things dealerships can do to expedite the process for sure. Is there anything else that comes to mind on the dealership side before I'd like to talk a little bit about on the consumer side what dealerships can do to educate? But on the dealer side, anything else strike you as things that they can do to improve their chances of getting funding on a unit?
Yeah, well, I think we'll talk about a little bit about the difference between the different markets that exist within transportation. We are experiencing and seeing, and I know, you can look at trends and see the differences between vocational trucks and trucks more geared for construction companies or or land clearing companies versus straight transportation companies. In terms of, some of the educational pieces and what you want to, I would say, equip some of the salespeople with, without getting too deep into the finance conversation, they're right now in the OTR market, let's say, definitely starting to have conversations about down payment availability, right? And what we're seeing with a lot of customers right now, revolving utilization is sky high. Okay. So in the United States, we have $1.2 trillion in revolving debt, right? Credit card debt, which is an average interest rate of 24%. And that is viewed as a significant negative credit factor by almost every equipment finance company out there, right? Especially within the truck market. You're either going to need to save money for a down payment, or you're going to need to pay your credit card, your credit card utilization down, right? To get not only to get your credit score up, but also to show that you're not saddled with what can become kind of that never ending doom cycle of credit card debt. So in terms of education of the customer and having some conversations, especially early on in the process, about getting the financial house in order, right? Paying down some of the credit card debt, making sure that you're showing healthy balances in the business account. You're not getting paid and then pulling every dollar out of the business account, right? You're going to want to show that you're in a liquidity position that can not only put a down payment towards the truck, but also can service the payment on the debt for a month, 2 months, even if you got sick and something happened and you weren't able to drive the truck, right?
Yeah.
So there are
many months? I'm sorry. How many months do you typically look at? So if on a business loan here, obviously.
So we generally like to see that there's roughly 5 to 10% of the requested finance amount as an ending balance on a monthly basis, right? So
Okay.
it ends up, if you're buying a $100,000 truck, you want to see that they have about $5,000 to $10,000 as an ending balance each of the previous 3 months. And the reason for that is if something goes wrong, you want to see that they aren't getting this truck to make their payment, that they have the ability to make a payment while they're getting work for the truck, right? So it's not something where if everything doesn't go perfectly over the course of the next 30 days, which is generally the next payment, the next payment's due within 30 days, you want to see that they have some ability to service that debt without just getting paid, right? And we also know that there's going to be it's going to take some time in a lot of cases for them to get paid. If they're factoring, it's a different story, but in some cases they could have, slow pays on their actual receivables. And so you want to make sure that they have the ability to make that payment in the account.
Yeah. Okay. Yeah, that's huge. So 3 months, 5 to 10%.
Roughly speaking, that's going to be a good kind of barometer. Everybody's a little bit different, right? And there are hundreds of equipment finance companies out there that all have their own secret sauce and their own kind of, credit appetite. But I would say safely you want 5, 10 is definitely going to be more advantageous, especially in this market where the credit is tighter.
Yeah. First time owner operator. I know that's a tough one right now, but what can we be doing for those guys?
First time owner operators, in most cases, no one's going to want to lend out 100% LTV, right? They're not going to want to go full 100% financing. They're going to want, I think, as early as you can in the process, especially when you're talking to the guy that's aspiring to start his own company, you want him prepping for a 20% down payment on the truck, right? Mm-hmm. You might be able to sneak by and you might be able to get them done with 10% down, but in most cases, you're seeing 20% as kind of an industry standard dollar amount, 80% LTV. And that's protecting, and a lot of this is reactionary from what we saw in the previous cycle that we discussed earlier in the podcast. But they want to make sure that if there's more volatility in the truck market, that they're not basically left with a position where the truck is not worth nearly what they've lent out on it.
Yeah, 100%. So I think that's a tough one, but.
There are other positive credit factors that we could dig into, but it's hard to say, hey, when you're talking to a customer that wants to buy a truck, tell them to go buy a house, right? Because homeowners is a positive credit factor. Like that's certainly not going to help get the truck off the lot more quickly. Each deal is a little different, and so you have to take it as it comes. But I would say the revolving utilization and paying down the credit card debt is the fastest way to increase the credit score and make that customer seem like they are in a more healthy financial position.
Yeah, that's great. So yeah, good advice. On the dealership side, when they're looking at equipment that they're expecting to get financed, I know a lot of times a dealership will just give you some basic information on a unit. Or how are you putting prices on these? Or how are finance companies in general getting the prices calculated for these units? What's that look like?
Yeah, when I first started in the industry, a lot of it was just looking at what other asking prices were online and making sure that you were within some,
Margin.
some margin of error of what others were listing it for. I think that there are a lot of fantastic tools now that can help with that can help an equipment finance company make sure that the value checks out. I know that within the transportation market, the best way to ensure that your transaction moves smoothly is not only with your credit application. I would, for anything transportation related right now, upfront ask for 3 months of bank statements so that the customer is not surprised if that ends up being a request. You just want to ask for the 3 months bank statements. Again, a lot of the underwriting of these customers is going to relate to their liquidity position, right? And how they're doing from a cash flow perspective. Spec sheets, so detailed spec sheets with photos of the truck, and also, and I know, we've spoken about it, but and as Chris with JD Power, but the adjustments, right? There's a big difference between a 2019 truck with 350,000 miles on it and a 2019 truck with 750,000 miles on it. So to really give that detailed spec sheet with all of the information as to the quality and condition of that truck is going to help especially when you're on the borderline with a certain credit, right? If you're a strong A credit customer, a lot of the times the credit reasoning is that you're an A credit, you pay your bills on time, you know exactly what you're getting yourself into, you're likely going to pay. But when we start getting into some of the more challenged credits or some customers that might have a red flag here or there or a blemish on their credit, you want to make sure, and the underwriting then does shift a bit towards the asset to make sure that the asset is going to hold up for this person purchasing the truck. So the more detailed the spec sheets can be, the JD Power reports, I know that we've seen dealers send those over, and those are extremely helpful in really assessing the quality of the asset that's being financed. And then as we get into any warranty information, if there's still a remaining warranty on the truck, if there's an aftermarket warranty that's offered alongside, I know some equipment finance companies will require an aftermarket warranty that they're either going to allow the dealer to place on the truck or they're going to force the customer to purchase this warranty, right? So that becomes an additional risk mitigation tool that helps protect the customer in case something goes wrong with the truck. Proof of overhaul, proof of, any of that sort of stuff. The more information that you provide up front, the better chances you have that the transaction is going to move through efficiently.
Yeah. Awesome. So yeah, you're speaking my language because
I know
we've been doing this for years, and I know we ran some, I don't want to call them tests, but dealership sending in credit applications and just basic typed out asset information versus photos and some of the things that you're talking about, and definitely saw a bump in the level of funding that was getting approved. So on the warranty side, are finance companies generally open to funding the warranty these days, or how does that look?
Yeah, in a lot of cases, it's going to be included in the soft costs of the financing. So most of the time, you're looking at about 20% of the actual funding amount can be soft costs. So a warranty in a lot of cases is going to, especially when you're looking at later model trucks or trucks in general, the warranty, it does increase the monthly payment, which in some cases can also increase the down payment that's required, but it does provide a greater level of comfort that if something goes wrong with this truck, it's not going to be a complete loss, or the customer is not going to basically have to tell you to come pick the truck up, right? Instead, you can work with them over the course of the month or two while the warranty is kind of being carried out and the necessary repairs are being done. And you can work with that customer and modify the payments or extend the term, add the payments onto the back end. There's a lot more that you can do from a customer service perspective with the warranty when you know that within a month, 2 months, 3 months, this truck is going to be back up and running versus I don't have a warranty, I can't pay for the repairs, come pick it up, right? That's never That's never a good solution. That's definitely not a good solution for the bank that's financing the transaction. It's not a good solution for the customer.
Yeah. Repos aren't good for anybody. I mean, it's something that I think actively avoiding getting into that position. And for me, I always look at even the truck driver, owner operator especially, or somebody that's in that business. They just lost their entire livelihood, their dream, everything that was going on, and then that kicks back into the entire industry, the finance companies. I mean, we're seeing it play out right now. And it's a sad situation. So whatever we can do to avoid that, I think is what we collectively as an industry need to do. So
one more little thing, just in terms of compiling a package and providing as much information up front as possible. What I will say, a lot of the times, the specificity from the customer in terms of what they're hauling, right, and what they actually. So 3 guys could come in to buy a sleeper truck, and one of them's just going on freight boards and going OTR and going across state lines. The next guy is staying within the state of Texas, right? And he's only hauling one specific, he has guaranteed contracts. He's hauling one specific type of good. The other guy is hauling sand, gravel, dirt, pulling a dump trailer. Those are viewed differently. So transportation as a whole has a lot of sub-industries within it. And the more specification that you can provide, or specificity you can provide as to what exactly this person is hauling, will give the credit analyst at the equipment finance company the ability to make a more holistic credit decision and not just immediately say, nope, I don't like this deal, it's transportation. Because there are different delinquency rates for folks hauling sand, gravel, dirt than there are for folks hauling toilet paper, right?
Yeah.
Or general freight.
There's your COVID reference right there.
There you go.
Yeah. So when we're talking about these different markets, so I think that's another interesting point. Steve Tam had come out with some information, and ACT Research has put out different models that have played out. And the vocational market, for example, I think I had some notes on this in September 2024, making an all-time high of 20,000 additional units. And then, but then there was a drop, year over year drop in December by 40%. So I think there's several things that can explain a lot of this, but the heavy duty market is Class 8 market's up to 218. So it's high. Taking all this information in, and I know you're up on this, and we talk all the time and try to figure out what's going to happen. And we don't have a crystal ball or anything, and this isn't really our area of expertise. We'll let some of those other guys talk to that. But from a lending perspective, I'd like to know, what are you seeing out there in the marketplace, in the vocational market, the Class 8 over the road heavier applications? What are you seeing out there right now? Are you seeing an uptick? Are you seeing some different trends that we can pay attention to?
Yeah, we're seeing a considerable uptick in vocational, right? Starting second half of last year, I'd say, vocational became, our main specialty is construction, vocational, transportation. And the vocational side of the business absolutely exploded. Now, part of that, when you're looking at some of the, and you and Chris mentioned it on the earlier podcast, right? But when you look at some of the, the hurricane in the Southeast, right? The hurricane in the Southeast, and you look at different natural disasters and hurricane cleanup in general being a massive travesty, and it's awful, right? In terms of the vocational, or the application of vocational trucks in those areas, you see a considerable number of dump trucks flooding in, bucket trucks doing tree cleanup, et cetera. So we saw a massive surge in vocational, and that surge has not died off whatsoever. Dump trucks, bucket trucks, winch trucks, tow trucks are all extremely hot. Those markets are definitely also viewed differently than the general transportation market. I've talked to some dealers who it's been more difficult to find a solution that works for the customer, but a lot of dealers within the sleeper markets, that demand is up. right? The demand is up, freight rates, spot rates, it's all steadily creeping up. They feel really excited about where the industry is heading. Now, feeling excited about where it's heading is probably just based on how low things have been for the last couple of years, because there's still this massive blocker, which is finance, right? Biggest blocker right now is the customer can't afford the down payment. And when they can afford the down payment, because of the loss trends, the interest rates are sky high, right? And the interest rates are too high for that customer to justify. When they start adding in insurance, fuel costs, and the monthly payment of the truck, they struggle to find how they can actually make this make economic sense.
Yeah, for sure. The last couple of conversations that I've had this week with some different people in the industry, they're pretty upbeat about what's going on. And for sure, we just had the flood in Kentucky, and all these things are happening, which wasn't as major as the other two natural disasters, but I mean, it's still there, and it's still a terrible thing that's going on. But with that, I think even in California, so we're going to see an uptick in need for dry goods out there. We're going to see an uptick for building materials and all of that construction that's going to happen out there, and also in these other areas, North Carolina and Florida even, and so forth, that have been hit by the hurricanes or floods or other things that are going on. Not to mention, I think, just general excitement in the economy, maybe a little bit with the tariffs that are potential. We just don't know what's going to happen with this new administration. I mean, it's kind of day by day, watching and seeing something new happening. And so I don't know where that's all going to end. I'm not going to comment on it. I'm just going to say it's there, and everybody's watching it, and we'll see where we flush out in the end here. But as we ride that wave, there's certainly more demand. I think there's still some construction projects that are larger construction infrastructure projects that are still being funded and are going on. So all of that is playing into exactly what you're saying with the vocational market. Spring's coming. I hate to say dump truck season, because a lot of people are like, there is no dump truck season, but we always saw it at the dealerships I worked at. It would be, in the spring, man, we'd sell a lot of dump trucks, and things would pick up that way for sure. So,
I think there's, with, as you mentioned, the natural disasters with cleanup there, and then just in general infrastructure spending, I do believe that the new administration, we'll see what happens with the tariffs and how that all kind of trickles down into the economy. I think there's, some would say it's saber rattling, and it's an effort to get concessions out of other nations. I think this tit for tat trade war it's really difficult. We haven't seen it on this scale in so long, and so I don't know exactly how things are going to play out. I think in general, there's extreme bullishness about all the infrastructure spending. There's extreme bullishness about reshoring and making sure that America regains our manufacturing capacity. The CHIPS Act and the Inflation Reduction Act, earmarked and appropriated trillions of dollars into infrastructure spending. So I think that there's a lot of people that are going to be really busy here over the next 3-4 years, especially within the vocational market. And I do believe in transportation. I think we're 6-ish months away from the transportation market opening back up. I think within equipment finance, we see these cycles, and we're dealing with, the last few years with a lot of folks that I've spoken with, they've indicated it was worse than 2008, 2009 in the transportation market. So we're at the bottom, but I do believe it's only a matter of time before people start pointing an eye towards the transportation market and start getting really excited about headwinds or tailwinds in the economy.
Yeah. Awesome. Well, any last thoughts here before we wrap it up here today?
No. Thank you for having me on. Certainly excited to continue working with you, and always here as a resource for any of your network, and certainly excited about the industry and excited about transportation and vocational as we move forward. And here is a resource for you guys.
Yeah, I love it. And so I think maybe, John, if you're open to it here after a few months or whenever is appropriate, and when we see some changes or things going on in the industry, maybe love to have you back on and get an update to see where we're at with any major changes in finance. So
Yeah, I'd love to.
awesome. Well, I've really enjoyed today, and I hope our audience did too. And as always, I just hope that somebody got something out of this that'll help them get some trucks off the lot and over the curb. So I appreciate it, John. And thank you, everybody, for listening.
Yep, you got it. Thanks for having me.